Bitcoin has hit an all-time high as of this morning. And the first thing I want to know is how high is it going? We will, of course, talk about CPI, which, oh, by the way, is forecasted to go up 3/10. We'll talk about the dollar and its demise, and we will talk about the relentless bull market that may never go down again, I say in jest. And of course, we have these conversations with the one and only Mr. Dan Bird. How you doing, sir?
I'm doing well. So that headline, that's like an inverse negative headline, right? The market will
Positive,
never go
man.
down again.
That's right. Of course we kid. Of course we kid. But let's start with Bitcoin. I saw it hit an all-time high this morning, took out the 112s up at 118, 119, something like that. People are talking about it going much, much higher, but I don't care what they say. I want to know what you say.
Well, I calculated the measured move on it a couple of weeks ago, I think on here, or it might have been my channel. I don't know, but I measured it to 134.
Okay.
So that's where it
So
likely will go
134,
to.
here we go. That's the there you go.
One interesting data point that I saw, John Carter put out a video. I haven't watched the whole thing yet, but some really interesting stuff in there, especially around how markets move. But one of the things that he said was that I didn't know this, and it'll be interesting to watch it. The ISM number, do you know what that number is right now by any chance? I don't know, but
ISM manufacturing or ISM services?
ISM manufacturing.
I believe it's still below 50. I think the last read was 46 and change, if memory serves.
Yeah, he said it was 49. So
Okay, but below
I
50
think
for
it's
sure.
I think it's been moving up. But one of the things that he said was when it gets over 50,
Mhm.
Bitcoin takes off.
Wow. Why would ISM manufacturing and Bitcoin be
Yeah,
correlated?
I don't know how they're correlated. It's just a data point that he threw out there.
I'm going to have
So
to think about that one. Folks, in the comments below, if you have any ideas why ISM manufacturing and Bitcoin, one is clearly a risk on trade, the other is, the economy. Maybe
well, the other's a growth indicator,
could be.
right?
Yeah. All right. Well, yeah, let's see. I've never even thought about that. And I
And
will have an answer
if the
next week.
market is going to grow, then it's risk on. So
Yeah, no
Bitcoin's a
question. Yeah, there
risk on
definitely
strategy.
definitely is.
Also, anybody in the comments, if you know what the current ISM number is,
Yeah, let's know.
people can look that up. I'm sure we can look it up, but
Yeah, very
we'll
cool.
let them look it up.
All right, so we got Bitcoin going from 119 to 134 like that. And again, that's something you think could happen, I'll call it relatively soon, meaning next month, next year. What's the timeline, you think?
So, yeah, that's a good question. We'll talk about the market in general. I've shown before that Bitcoin is positively correlated with the NASDAQ 100.
Correct.
So if that goes up, then actually either way, if Bitcoin goes up, then it goes up. So
Yeah.
um, we're coming into a period in about a week. That is a week period. It's a down cycle. Typically, the market typically goes down
Second half of the
starting
year.
the
Yep.
week after next week. This Friday is options expiration, so and we've got CPI on Tuesday, so those could be the catalysts that get it started.
Okay.
But historically, the July 21st, right around that period, markets usually start to go down, pull back for a few weeks. Doesn't mean it's going to crash.
Right. Okay.
Just means it's going to pull back. Um,
Very cool.
and like I always say, just because everything is overbought and the market is very overbought right now, we're going to look at some of that today, does not mean that you should sell.
Gotcha. Very cool. Well,
Being
let's get
overbought
into
is not the same
inflation.
as selling.
Yeah, let's get into inflation. It's gonna be the big number of the week. CPI headline inflation I saw this morning is supposed to go up 3/10. So kind of a
Uh,
big move. Really, what Jerome Powell has been telling us is coming is expected to come.
well, I think it's going up to 3/10 the month over month.
Yeah, month over month is going up 3/10 from point one last month, but the headline
Right.
number is going from 2.4 to 2.7, I believe.
2.6. Well, 2.6 is what I've seen so far. If it
Yeah,
went to 2.7, I mean, I just checked it a few minutes ago. It's at 2.6. So
Yeah, I got
if
mine
it's
from
going to
Market
2.7,
Watch.
that's
Yeah, go ahead.
it says 2.7.
Yeah, Market Watch. I'm going back
If
right
it's
now. I
if it
can't
says
do it.
2.7, then that's probably where it's yeah.
Yeah. All right, let me pull it up one more time. This is a big number. That moving
Two
three
seven is
tenths.
probably
Yeah,
about right, actually.
yeah. 2.7.
2.7.
Yeah,
Okay.
two four
So
to 2.7.
that's probably right. 2.6 is the number that I had, and I thought 2.6 is probably a definite, and I thought it could go a little bit higher than that. So 2.7, I think, is actually the right number. But that's
Now,
quite
what happens? Right? What's the market reaction to a 2.7 print? It
a.
attempts it. It's been looking at July, like you and I. You and I have been looking at this month for 6 months, telling people
We've
it's
been
coming.
looking at that since before the election last year.
Yes. Yes.
Before Trump was president, before there were tariffs, before any of
Yep.
that, we're looking at July. So just pure math says it's going up.
Yeah. Exactly.
And we'll look at the other things related to
Well,
that as
let's
well.
play it out because I think it's going to be the big number. Also, we also get retail sales on Thursday, which I think will be a big number. But let's play inflation out
Right.
for a minute because last month it was expected to move and it didn't,
It went down.
which it did. Yeah. So again, people were looking at inflation like, where is it? It's the boogeyman. The Fed clearly thinks it's coming. Probably more than half the Fed presidents think the summer months, including this month and next month, will be rough. But let's play it out. Let's pretend for a moment it lands like a dud. Instead of getting a 3/10 month on month move, we get a zero point 0.1, a very tame number. And we don't go up to 2.7, we go from 2.4 to 2.5.
Then the market is never going down again.
He says in jest. But yeah, so again, if you play that out, that is gonna. Well, let's play this out. Let's say it only goes up 1/10. And again, we're just playing what if. Does that put a July rate cut on the table?
Yeah, probably.
I agree. I actually agree with that. If it only goes up 1/10, 2 months in a row, the boogeyman doesn't show
With
up.
a tame employment report
Yeah,
and a very less than expected inflation. Yeah,
significantly
yeah,
less.
we would. I think we definitely get a
Okay. So we actually both agree, and I don't think I've said that yet. If we get a 0.1 or lower month on month, the July rate cut is certainly possible. Now let's play the middle ground. It comes in as expected, up zero point 0.3. Fed presidents can basically say, "See, we told you," because a zero point 0.3 annualized is 3.6%. So that's
yeah,
above
right,
their target by a long shot.
right.
Does that put a July rate cut on the table?
No, I don't think he does. I don't think they do anything.
Yeah, there's no if it comes in as expected, the Fed's going to sit back going, "Yeah, we told you, more of that's coming." That's what they're going to say. Now let's play the last one out. Let's say it comes in hot, like zero point 0.5. What happens?
Nothing.
Really?
What do
Nothing?
you think? You think they're going to raise?
No, I don't think they're going to raise, but I think the market is going to look at that.
Oh,
The 10 year is
the
going to.
market. Yeah, the market won't like it. I mean,
Oh,
the market's looking for a catalyst. The market is overbought right now.
yeah. The market wants
And
a
again,
catalyst. That will be the catalyst to go down.
overbought does not mean sell. So
Correct.
that July 21st date that I mentioned, which is the next Monday,
Mhm.
so a week from tomorrow, basically, that would just move it all up by a week.
Yeah. If we come in hot 0.5 when we're expecting
And
point
August
0.3.
is usually a down month, so we'll start next week instead of the week after. But it's going to happen. We're going to go down anyway.
Mhm.
Um, no, the market doesn't go up forever. So
Exactly.
so
Okay.
it's poised. It's poised to go down. I'm going to show you some things that are interesting. That it's actually really it's a really strong market, really strong economy, very strong market. Even if it does go down, it's going to be a normal, healthy pullback.
Okay.
So
Very
it'll be
good.
an
Well, why don't
opportunity for people to get in before the big run up in the fall.
okay. So the summer
But
months could be a time to build a position that you get into
yeah,
slowly
to
over
add to
tranches.
things, and if you're a long term investor, um, John Carter had a great comment on that. He said that everything I'm talking about is for traders. People that are trading, they want to get in lower, they want to protect their profits, things like that. If you're a long term investor, this doesn't mean sell anything. What it means is when it pulls back, you add to your S&P index positions.
There you go.
You just add to it at a lower price. That's all.
Very good. Well, do you want to show some stuff? Because my next topic was going to be the dollar, but I have a feeling you want to show some things first.
Yeah, I got a few things on the dollar that I'll show.
Okay.
Let me share. First thing I'm going to show you is the percent likelihood for rate
Mm-hmm.
cuts.
Yeah, Fed watch. Yep.
And the interesting thing about this that's different from last week is this September one.
Moved.
Notice that the October is actually higher.
Hmm. That is
So
interesting.
this is actually saying they might not even cut in September.
Yeah, it's definitely moving. It will move. It will be September will be market moving Tuesday morning. Absolutely.
Yes, absolutely. Yep, for sure. And if we get if we get the 2.7, which would be higher, this could easily get pushed out to October.
Oh, oh, for sure. Oh yeah, we get something that's hot. Oh, that'll go to zero or near zero quickly.
Right. So
All right, so
it's going to be very,
it's also saying again, as of I guess Friday's close, they're expecting 2 rate cuts this year. That's what they're basically saying by December 10th.
yeah. So September, December, or October, December. I mean,
Yeah, that's
it's
what it
showing
says.
93% for December, but that's 2 rate cuts
Correct.
to get
Yep.
to that, right?
Mm-hmm.
So there needs to be one in one of these months right here.
Correct. Exactly.
So,
Okay.
but yeah, okay. I mean, what this is saying is October and December, not September and December.
And then so by July, where are we? July 26th, summer of 26. We're all the way down
July of next
three and a
year,
quarter. Yeah, we're at 3.25 in a year.
we're down here. So
Yeah.
this is the July meeting down
So
here. So
that
that's
means
one,
four
two,
cuts.
three. That's four cuts
Okay. 4 cuts.
by next July. So four
The
cuts in
housing market would like that.
right.
Okay.
This will be interesting to watch. I'm now putting this in my newsletter every week.
That's awesome.
So this updated view is in the newsletter every week now.
Great ad.
Yeah, so we'll continue to watch it, see how things go. All right, let's talk about CPI. By the way, here's my website, breakpointtrading.net, for anybody that's interested. My YouTube channel is right up here in the upper right. I do a midday update every day, about 15-minute video, what the market's doing. Market has been very strong, like I mentioned. So I'll actually look at what it's doing during the day, and then just before I log out, I'll look at it again, see if anything's changed. But let's look at CPI first. And just like you and I have said, and I want to make a point on this as well. CPI headline. Not only have we been talking about this July point right here, CPI could go up here, and this has been here for months and months. The
Mm-hmm.
circle and this little comment down here.
Yep.
The Fed knows this too. So as much as Trump is trying to browbeat Powell into lowering rates, the Fed knows this. They've seen this for months and months as well.
They knew this was coming.
They know that this one is going to look like inflation is going back up. So the worst thing that they want to do is to lower rates and then immediately have to raise them again.
Yeah, they couldn't cut before this month. No, there's no chance.
Right.
No.
That's right. But if this does come in tame, they certainly can cut.
Yeah, because
Now,
it gets better. They get wind at their back. Yep.
right. Now, my big question is Powell knows he's going to be replaced Q2 next year. What is it, April?
May.
So he knows his time is limited.
Mm-hmm.
So will he just go against Trump just for the sake of going against Trump?
Well, I don't know. I mean, there's a lot of people. Danielle Bertino Booth has certainly changed her tune. She went from being a huge Powell supporter to now someone who's saying quite clearly that she thinks he's playing politics. Let's play
Mm-hmm.
this out. Let's not only play Powell, but let's also play the other 18 board members.
Right.
Because
Yeah. Because it is um,
yeah,
a
it's
board.
a board. Yeah, it's a
Yeah.
collection. So we both agree that Powell's out May. Or I mean, at the longest, he could resign before that. Who knows? But let's just say he plays it out in May. But what's going to happen as soon as the July meeting is the board is going to start to separate. We already know Christopher Waller, Michelle Bowman, likely others based on the Fed minutes are actively talking July rate cut. You have others, again, the Fed minutes were so eye-opening this week. Others saying no cut to 25 or 26, excuse me. So you're going to start to see the board splinter. I do not think the Fed is going to have unanimous decisions at all going forward. Now, some of that,
I agree.
yeah. Now, some of that's going to be because of opinion, but I don't think it should get twisted that Michelle Bowman, Christopher Waller, and maybe others are auditioning for the big job.
Right.
Which means you're going to have people in the room, you know, with other intentions. So that'll be interesting.
So hang on a second. Let's think about that for a second.
Sure.
You and I have been in board meetings and corporate meetings, and we've seen executives positioning for certain directions, and it's usually not a hidden agenda in most cases. People know what they're doing, right?
Yes.
So if those board members are positioning to take over that spot at some point, they are going to be talking about cuts often.
Yep.
And the rest of the board members that are not positioning themselves know that. Yes. They know that's what they're doing. So the other board members will not necessarily go along with them. They will know that they're positioning themselves to take over, and that's why they're saying their words are saying cuts, even though they know that they're really not going to cut. So it's all a game.
Yeah,
it's all a fine dance that they're doing.
It's going to be interesting because at the end of the day, even if Powell's being replaced and he has 2 or 3 people angling for his job, he will still be the guy in front of the microphone.
Yeah.
Until May.
Right.
So back to your
That's question. Right. And they've got a lot of time to audition still. So they can start talking now about cuts, knowing full well that there won't be a cut. But
they could be the people
Trump starts to notice them at that point.
Yeah.
And then they'll start talking even more about it when they know for sure there will be a cut. They'll say, "See, I told you we should have cut."
Yeah.
So it's all an interesting dance that's going on.
So back to your question. Is Powell going to purposely hold out because of Trump? Now, again, lots of things out there would say that's true. However, I'm going to step back and just wonder for a minute. I think Powell is frankly playing for his legacy at this point. I think Powell doesn't want to be known as Mr. Transitory. He doesn't want to be known as the guy that was too late to raise. Right. And I think he's trying to wash that off. I think he wants to be Paul Volcker and not Arthur Burns. And if that's his legacy, he is going to fight tooth and nail not to cut until the whites of the eyes of a recession or an unemployment spike. I do not think it is certainly somewhat political, no doubt, but I don't think that's the lead. I don't think he's doing this because he just wants to F Trump. I think he's playing for his legacy, and his legacy happens to go against Trump. That's how I see it.
Yeah, I don't disagree with that. I think both of those things can be true, though.
Yeah, they both can be true. Absolutely. Just it's a 1A, 1B thing. It's a 1A, 1B.
Right. Yeah.
Okay.
Yeah, I don't think he's going to do something that will hurt everything. So if we do get a very tame CPI number, I think he probably will cut.
Oh no, I think Powell would lead the race. I think if we come in with a flat or a 0.1 month on month, Powell's willing to say they're wrong, and Powell might even throw a July rate cut. Now again, I don't think anybody expects a 0.1, but nobody expected it last month either.
Right. Yeah. So anyway, we've all seen this. We've all known it's coming. So here we are. Now we're going to find out. So let's take a look. Let's take a look next at commodities, because that's the other interesting wild card. Yeah. And I showed this before, and everything went huge, had a huge run up in the middle of the month, and then pull all the way back, but still higher. Everything's still higher, except for food. Copper is continuing to scream higher.
It is.
I put this little arrow here because this is where the moving average lines crossed. So you can see it's green there. See back here when it crosses and turns green and continues to go up quite a bit. So still has room to go up, and it's still moving up even right now. But what gets reported on is in this shaded area. But oil and gas in particular, both are higher, even though they were much higher earlier in the month. By the end, they came back down. So I think that is going to play into it as well. I think that's going to probably reinforce that 2.7 number.
Yeah.
Which 2.7 is about what I thought it probably would come in at. I put together an oil chart. This is West Texas crude and Brent oil, Brent crude combined. And you can see oil has been consistently going down.
OPEC came out with a surprise. OPEC Plus, let's be clear. OPEC Plus came out with a surprise announcement last Monday saying they're going to increase production in August and September. So yeah, it's
so that should bring the price down even more.
Correct.
But right now it's continuing this downtrend. It's starting to push back up right towards the line again. But this is the thing that we need to watch. There's a lot of things right now we have to watch. Nothing is giving us any conclusive evidence, but everything is saying that we're getting close to an inflection point. Yeah, just getting close. So we have to just keep watching these things. So if we then look at the liquidity chart, and you'll notice here, so liquidity, the dollar coming down is good for global liquidity, which all that money flows into equities or other asset classes. When oil comes down, when the dollar comes down, commodities were just kind of going sideways to down, but now they're all starting to go back up. So here's the dollar. The dollar still is in a downtrend, but oil is heading back up. Commodities are heading back up. 10-year is pretty much in a range right now. And then money supply, you can see money supply right here on a 1-month rate of change. Even though the 12-month continues to move up, it's rolled over a little bit. Still not, none of these are concerning just yet. Okay. I'm just pointing these out. Like I said, you need to keep an eye on all of these things to see what they do. But as I said before, it's about 11 or 12 week lag time when these start to change that it affects the market. It affects the flow to equities.
Got it.
Okay. So about 11 or 12 weeks puts us at July 21st.
Yes, it does.
All right. So all of that is starting to line up. So let's take a look at the S&P just to see where the market itself is at right now. And then we'll look at Bitcoin and talk about that. Okay. So right here, it's just going sideways. Tried to make a breakout, couldn't quite do it last week. Went right up and pretty much got to the same level and then started to pull back on Friday. But again, doesn't mean that it's going to continue to pull back. Could easily turn around again. If we do get that hot CPI number, that will be the catalyst to send it lower. So, and it could go down here to the 21-day. That would be a very healthy pullback. That's down to the previous high. It's down to the 21. It's down to the what was a resistance line now is a support line. All of those are right there, right about 61.50. Today we're at 62.50, roughly 62.60. Gotcha. So 100-point pullback on the S&P would not be out of the question whatsoever. In fact, it would be normal, healthy, come back to the 21, bounce and go back higher again. But if it continues to go down, and that will basically take us into July 21st, then it could continue to go down to the 50 or the 200, which are down here. Again, none of that is saying that there's going to be a crash, just saying that we are set up as we move into August and September, the 2 weakest months of the year. We're set up for likely some pullback of some kind. Now, if you look down here, back over here is February. So this was the big sell-off in February. Went all the way till April. The relative strength index got a little bit above, didn't quite get to 70. So it was already going lower. So relative strength was already, or momentum, let's call it, was already going out of the market before this pullback. Right now, it's back up there again, the momentum is getting a little lower. So even as we made these two highs here, momentum went down a little bit. You can see those two right there, right?
Mm-hmm.
But this light green one in the background really hasn't gone down. That's also a momentum indicator, but it's a longer term one. And what happened back here in February, it went below zero right there.
Yep.
And then it continued to go down. It turned red through this whole period. It's still pretty far above zero. So this is what I'm saying. The market can stay up there, can continue to be overbought for quite a while. So it's really not ready yet to roll over. Let's look at credit spreads. So I showed this before, something to keep an eye on. We need to continue to keep an eye on it. It now has started to spike higher. This was not like this when I showed it last week.
Mm-hmm.
Last week, it was continuing to go lower, right? But in the last week, it started to spike higher. So anytime it spikes higher like this, we're getting near a top. Right there, there's a top right there. Starts to go higher there, there's a top. So again, it's not saying that this will happen. It's just saying that all of these things are starting to line up, that we need to be aware of, and just be careful. If you're a trader, I'd say, move your stops up, take some profits off the table. If you've got lots of gains in something, take 50%, let the rest ride. If you're an investor, this doesn't mean anything. This is just noise. If the market pulls back and comes down like I'm saying it might, then just add more to your position if that happens. All right, so that's credit spreads. Let's look at all these up here are basically bottom finding positions, but they can help with tops. Bottoms are easier, but these can help with tops too. So let's look at the rate of change. Rate of change for the NASDAQ 100. This goes all the way back to 2009. And what you'll notice, a 3-month rate of change is the one that moves first. So this one started to move up right at this bottom in April. So that's why I said this is great for finding bottoms. So right in April, when that hit a bottom, that's when the 3-month rate of change started moving up. Then the 6-month and the 1 year follow after. But right now, just recently, it's starting to roll over. Starting to go back down again. Again, doesn't mean it's going to crash. This might flip and start to go back up again. Just something we need to continually watch. And I'm going to be watching these on my midday channel. Advanced decline lines. So this one up here is the NASDAQ 100, the 5-day moving average of the advanced decline line. So these are the advancers versus decliners. It's been moving up. It's just getting ready to roll over right now. So it's starting to look like these rollovers right here were a pullback. Again, these are not big pullbacks. It's just saying that that's where a pullback. And this is the advancers minus the decliners. So if there are more advancers than there are decliners, then this line goes straight up. If there are fewer advancers than there are decliners, it's just basically math. Take all the advancers and you subtract all the decliners, and then you chart it. So right now that's going down. That means there are more decliners, even though it's still above zero. There are more decliners than there are advancers. All right. If we look at the bottom finder chart for the NASDAQ 100, percentage of stocks above 20, 50, and 200 are still really high. They're still way up there, but they're starting to move lower. But it's still a very bullish market. There are still way more stocks up above these moving averages than there aren't. When it gets way down here below these lines for the 20, it's at 10%. Actually, it was 0% right there. This one's 20%. This is 30%. When it gets that low and you've got the VIX way up, then that's where the bottoms happen. Tops are a little harder to figure out because it can stay overbought for a very long time. And that's what it's doing. It's staying overbought. However, you have to be aware. Just be aware. Put call ratio is just in the neutral territory. It's not extreme. It's not too far down, not too far up. It's just neutral. So it too is saying, yeah, the market could pull back, but everything is still really bullish. There's really no reason yet to do anything different. If we look at the McClellan oscillator for the New York Stock Exchange. This is basically just a moving average of the advanced decline lines. So if this is above zero, there are more advancers than there are decliners. All right. And these circles right here show you back in February when we had that big sell-off. You can compare the two, where we were then versus where we are now. The market is higher than it was back then. We made 3 consecutive higher highs. We made one in December, one in January, one in February before the market rolled over. But as we were making those higher highs, the advancers versus decliners was going down dramatically, getting closer and closer to zero. We're not really seeing that right now. And the bullish percent index, this is just basically the percentage of stocks in the whole S&P that have bullish configurations. Back here in February, it was pretty low, actually. The market was not as strong in February as it is right now. So all of these things are telling me that the market can absolutely continue. It could just go sideways. Like I said before, we could just correct through time. Right. Going sideways. But the next week is going to be really key. Next week is options expiration, which is max pain. I'm going to do a max pain on my Tuesday show. Nice. And I'll show you what max pain looks like as we go into options expiration. And we'll see what next week looks like. But everything's setting up right now for the market. It's not rolling over. It's not crashing. It's not coming down yet. But it's just looking for a catalyst. It wouldn't take very much to push it over the edge.
Got it. Well, do me a favor. Take a quick look at Bitcoin. We've mentioned it a couple of times. Look at that. And then let's get to the dollar.
Okay. Let's look at Bitcoin first.
Yes.
So on the market bias page, notice the market bias also is just kind of treading water. It's up near the top going sideways. Mm-hmm. Here's Bitcoin. Huge breakout, all-time highs.
Yeah.
4 days ago, where it broke out of the previous high. So it's continuing to go up.
119 today. Yeah, look at that, all-time high.
Yep, it's at 118,788 right now, almost 119. Still going up. This Bitcoin trades 24/7. So, and this I think reflects it. Actually reflects the. See if there's a time on here. I think there was a timestamp. July 13th. Yeah, that's today. So yeah, that's current. 118.8. So it just changed. So it's still going up.
There you go.
If we look at it this way, you can see clearly it's broke out of the sideways channel, or you could call that a Darvas box for those that are Darvas enthusiasts. So it's going to continue going up. If you just look at consolidation theory, this will be interesting for a measured move. Get this down here at about 70, let's call it 75. In the middle of this is about 105, let's say. 105 minus 75, 30 points. So add 30 points to 105 and you get 135.
There you go.
134 is what I said before. So
yeah, well, we won't hold you to that. 134, 135. I like it.
Yeah, right. Somewhere in that neighborhood. Now, once it gets there, what does that mean? Does that mean it's going to suddenly reverse and go down? No, it could do another sideways move like this. And then you have another measured move, another 30 points higher. So it could go up to 165.
Okay.
But it will consolidate, as all assets do. When they make a big move, they will consolidate sideways for a while before breaking out and going higher. Okay. That's how Darvas made his money, by looking for that kind of breakout.
All right. Very cool. Thank you for doing that. Let's get on to the dollar. You got some stuff to show us there? Actually,
you want to look at this is a monthly chart of Bitcoin, all the way back here at $200 back here. Wouldn't you like to go back in time?
Yeah.
Somebody should do a sci-fi movie about a time machine where they go back and they buy a bunch of Bitcoin.
Yeah, no kidding. There you go.
I think that's been done a few times, though.
Yeah, I think so.
All right, the dollar. Let's look at the dollar. I actually just updated this dollar chart over here for subscribers on the left-hand side. US dollars right there. So this is interesting. This is another thing to watch for the dollar. Everyone has been talking about, the dollar is dying, it's crashing. It's not. Everyone wants the dollar to go down. Everyone. The the U.S. wants the dollar to go down. Trump wants the dollar to go down. Um, China wants the dollar to go down. Europe wants the dollar to go down. I think about 65% of global debt is denominated in dollars. So when the dollar goes down, they refinance that debt more cheaply, and that gives them more liquidity. Just like oil getting cheaper, the dollar getting cheaper puts more liquidity into the overall system, and that flows into other assets like equities. But right now, if we just from a technical standpoint, these are the lower highs that it's been making. And I drew the line across each of those highs, and we are right at one again, right now, sitting right on that high. If I zoom in on this, let's go 5 months. There's what it looks like. So we're sitting right now right on that high. The dollar is starting to move higher. Gold is kind of going sideways right now. Down here is the 10-year Treasury, also kind of going sideways, but has a higher low. So the trend is back up for the 10-year. But the dollar right now is poised to make a move, to do something. And could the dollar maybe starting to come back alive again, resurrect itself? If it does, if the dollar goes higher and oil goes higher, and I showed all this on that,
yep.
I showed that on the liquidity chart. So what does that mean for the market? Market goes low. Market goes lower. So again, these are things that we have to keep an eye on. The other thing that I just worked on today was the performance graph for international markets. So notice the VTI is the total US market. So notice that back here, this is April. This is the bottom after the February sell-off. This was the bottom right there. Once the bottom hit, these are all of these markets, Germany, Eurozone, all of these started going higher, as did the US, but the US came down a lot after that February sell-off. And it was actually better to move into foreign markets at that point as they went higher. But right now they are starting to roll over, starting to go lower. Now they are not lower. They haven't made lower lows yet. So they could easily reverse and continue to go higher. So again, this is not telling you that it's time to move all of your money out of those foreign markets and back into the US. That's not what it's saying. It's just saying, just watch it. Just be careful. It came down right here too and then turned around. So it's starting to come down again. Notice Japan. Japan actually is getting close to a lower low right here. Now, I did this also on a relative basis. So the next chart I'm going to show are these same markets, but relative to the US. Okay, so these are absolute numbers right here. The next one is relative numbers.
Got it.
So there's the relative chart. So I'll flip back between them. So what this basically means is the US market, it looks like looking at this one that they're all kind of moving up at the same time. But doing it on a relative basis tells you, is the US market moving up faster, even though they all look like they're going at the same pace? Is the US market going faster than the other ones? So that's what the relative chart shows you. And to me, it certainly looks like the US is moving up more quickly or at a faster angle than the other markets are.
Okay.
All right. So there's the absolute numbers. There's the relative numbers. Okay.
Mm-hmm.
So another thing to keep an eye on, keep a watch on. You notice that from a relative perspective, these already went down and made a lower low. Emerging markets is down here. So they are all sitting right now, right on their previous lows, getting very close to it. If they go down at all, and Japan actually has already made a lower low. But the rest of them are very close on a relative basis. very close to getting to the previous lows.
Okay.
All right. And then I did one for currencies as well, currency pairs. So this is what currency pairs look like. And again, you can see the euro, the Swiss, British pound versus the dollar. So here you can see the dollar trying to make a comeback.
Mm-hmm.
And at the same time, other currencies versus the dollar are getting weaker.
No, it's really
Dollar's getting a little stronger. Other currencies are getting a little weaker.
Is this one of the classic signs that the U.S. economy is doing better than rest of world? Is this
Yes.
Yeah, so that's that. There's also a recognition that our rates are higher than the rest of the world, right? Mr. Too
That,
Late
yeah,
Powell.
that too. That which is a good reason to cut, frankly.
Yeah. Yeah, get more parity. Yeah.
Right.
Okay.
But this again, all of these things are not sending alarm bells out. They're not saying, everything is going to hell, it's starting to crash. None of this is saying that. This
Okay.
is just saying that they might be a canary in the coal mine.
Got
It
it.
might be giving us an indication
Be careful.
that
Move
something's going
stops.
to happen. And you combine that with the historical view of the week of July 21st,
Mm-hmm.
which is where the 8-week cycle,
Yep.
or I think it's a 35-week cycle, 35-week cycle where it rolls over. And the weakest period is August and September. I mean, all of these things are lining up to say the market is going to, at a minimum, just go sideways.
I like it. Well, the good news
And
is
and the
we're gonna
biggest
have
and
you
the
back.
biggest and the biggest catalyst is CPI Tuesday.
Yeah,
So
no,
that's
Tuesday. Tuesday's a big day. Could
yep,
go one of three ways. I love all this. Well, again, the
right.
good news is we get you back each and every Sunday. You have a channel where you put out multiple videos a day, 5 videos on your channel. So we have we're going to stay up to date. We appreciate you.
No problem. Yeah, I'll be watching these closely every day this week,
Yeah.
especially after the CPI number on
Yeah,
Tuesday.
folks, tune in to Dan's channel. What is the channel? Where do they go?
Just go to the website, which is breakpointtrading.net, and the link for the channel is right there in the upper right. The free newsletter, is right in this little box down here. So
Cool.
that, which has tons of really good information.
Awesome.
Had a
Appreciate you,
really
man.
good one put out this week, actually.
Yeah, I love the fact you added the Fed watch tool. That's a strong one.
Yeah, I do that. I'm going to do that every week now.
Awesome. Well, you take care of yourself. Have a great day, and we'll talk next week.
All right. Have a good weekend.
Thank you, buddy.